Hey there, back at you with some RTD news updates. And so today's theme is helicopter money, or what I consider to be legal counterfeiting by central banks. And so I got a couple articles here. For the most part, they all have to do with quantitative easing or monetary stimulus or whatever you want to call it, but yet it's a matter of when and not if. And so here's an article from Value Walk, and the title is Helicopter Money, Who Will Be the First? And so this writer here basically gives his take on some prior predictions that they've made for their clients in regards to investing. And so basically, he talks about Japan, and it looks like all eyes are on Japan. He said that for the most part, all his forecasts and things like that, as far as where some money can be made in the next couple years or so, will be in Japan, basically shorting some of this debt that's coming. And so he gives his viewpoints as to why his prior predictions were correct and how he believes that in the days ahead, his predictions will be even more correct when Japan begins unleashing helicopter money or quantitative easing or stimulus or just keep it nice and simple, legal counterfeiting. And so he lists a couple things here that kind of proves this point. Interesting take on how they're talking about introducing what they call zero interest long-term or forever bonds. And so as of now, they're already in negative territory. So basically, they're talking about issuing these bonds that basically would never have to be paid back type of thing. And so they're talking about how that can kind of keep things afloat for a little while, because if no one's expecting to get paid, then there's no real need to collect. You can pass these bonds on and stuff like that. So, not quite sure about that model there. But then he lists basically a conversation that was from Bloomberg a while back when Ben Bernanke visited Japan, and how he met with what appears to be the successor of Abe, which is Etsuro Honda, who's, I guess, one of the guys involved in the conversation. And the talk ended up going to, as they put here, Honda said Japan already engaged in a strategy that involved helicopter money. He wanted to convey the idea to Abe and asked to meet with the premier, whatever, happened in Strand or whatever. Where we at? Up here. He noted that helicopter money in which the government issues non-marketable perpetual bonds with no maturity date, and the Bank of Japan directly buys them, could work as the strongest tool to overcome deflation. So it's called marketable perpetual bonds with no maturity. So that says a lot. They're as they go along, they're inventing and creating new ways of, you know, deceiving and robbing the people. So definitely a good article worth checking out. You can find it below. The next one has to do with more easing, legal counterfeiting, yada yada yada. This is from Zero Hedge. It says global central banks are all in. QE running at a record 180 billion per month and rising. And so what was interesting about this here is it lists some of the top central banks from Bank of England, Fed, Bank of Japan, ECB, and it gives you a visual representation of how much liquidity has been injected into the banking system. And all of this, for the most part, has been to save their investors, which are the big banks, the too big to fail banks. It just shows here how since 2008's crisis, how this has been this just continuous onslaught of just asset purchases, or what I consider liability purchases, which they're buying the debts problems with at the expense of the taxpayers. But just once again, just a visual representation of how bad things are, and the idea that things are not getting better because you can't pay debt with more debt. So it can only get worse. And so they're going to begin creating more ways of trying to legally counterfeit, which ultimately hurts to those that are unaware. So just something to check out. The next one is from the Sovereign Man, and it has to do with the idea of the debt being too much. And so here in this article here, Simon Black, who's a gentleman who, for the most part, travels the world learning and investing and sharing good information. He's pretty much a historical guy. So he always starts his pieces off typically with, comparing history to today. And so here he talks about get ready for America's new 29 trillion debt. And he's currently writing this from Spoleto, Italy. This was written as or published as today. And so here he talks about how France's economy in 1781, there was a finance minister who pretty much gave a report saying that the finances of the country was in good standing. They were plus 10 million livres, at the time. And then ultimately how he goes into how they end up, for the most part, cooking the books and basically lying to the people because they really weren't in the positive, they were in the negative, having borrowed too much money, had bailed it too much, and just basically living off credit. They pretty much overextended themselves, which ultimately led to their currency crisis and hyperinflation and just the historical lessons that were learned from government, just basically robbing the people. So he goes on to give a nice little historical lesson. And then actually towards the bottom, he gets into how it relates to what's going on here. And so he gives them actually some good, interesting details of how the financial state of the economy here in the United States. And it says, over in the United States, the Congressional Budget Office recently published its own projections for America's grim public finances. Bear in mind that the U.S. debt is nearly $19 trillion and climbing. The CBO sees at least another $10 trillion in debt in the coming years and projects that the U.S. budget deficit will increase every single year. The evidence is already so clear. Military retirement spending rose by 8.7% last year. Medicaid costs up 10%. Certain government employee benefit programs 17%. No coincidence that the government employees get first dibs. Overall majority outlays rose 6.6%, 3 times faster than the U.S. GDP. And so basically he's saying that by continuing to keep things as they are, by lying to the people and covering up with these fake statistics and things like that, those who are aware, who actually read the correct Congressional Budget Office's reports and U.S. Treasury annual financial statements, they already see that things aren't as good as they really are. But he's just giving more of a look at historical comparisons to France years ago to today. Definitely a great read. Next one, an interesting one, very interesting one. Why currency wars will cause the world more financial pain. So this came up yesterday. And so it goes on to talk about currency wars. Since everyone's indebted, central banks are going to be printing. They've lowered interest rates for the most part to try to compete against one another currency-wise, trying to outdo each other to the bottom. And it gives a lot of interesting information about how Japan and Europe are likely to further their ease monetary policy. So basically with all of this helicopter money and these stimulus being injected to the banks, they're diluting what's currently out there, which basically comes back to hurt those who hold on to it. So give a lot of interesting facts here, a lot of things to look into. Definitely something worth checking out. So I encourage you to do that. It's below. Next one, another good one. Go up to the top. And it's how the pieces are falling into place for another global financial crisis. And so this article here gives more information into the actual banking crises all over the world. And it talks about how there's been several stress tests underway and will be coming soon, which will pretty much reveal how bad the banks are. So it starts off here with Italy, the Italian bank with the NPLs, reflecting around 20% of Italy's GDP. They have 360 billion of non-performing loans. I think I mentioned that the other day. Then he goes on to talk about how Italian banks' access to new liquidity is limited because no one wants to invest or, basically, throw away their money knowing they're not going to get it back. Then it talks about how Germany's fragmented banking sector is vulnerable, not having enough fully reformed after 2008 crisis. Deutsche Banks, which is another bank that's, everyone is, who's aware is keeping an eye on that. And so that's another bank in another country that's going to really hit the ground and take a lot of things down with it. And it gives more information about that. Talks about China. Official bad debt under 2% of total credit, or around 6%, including special mention loans. IMF estimates that China sits on 1.3 trillion of risky loans. So that's another situation there. India, meanwhile, confronts stressed loans totaling more than 150 billion, around 10% of GDP. Brazil, banks face delinquency rates for loans more than 90 days overdue at about 3.5%. So the list goes on and on of financial institutions that will pretty much either one of them may be the catalyst for the next monetary crisis, like the one we had here in the United States with the whole Lehman Brothers and AIG and Bear Stearns and all those companies that were basically just extended in too much debt beyond their ability to ever repay. And of course, who paid for that? Taxpayers. Next one. Abe plans stimulus package of more than 28 trillion yen. So this here is from Bloomberg Markets. It's a short video here of some CIOs and things like that from in different companies talking about, you know, the side effects and the things that they project with this 28 trillion yen injection of legal counterfeit money. And it talks about the plan will include 13 trillion yen, fiscal measures, said report, and they kind of break it down as to where it's going to go and things like that. But ultimately, once again, legalize counterfeiting of injecting new digits and paper into a system that's already fighting deflation. And so what they're trying to do is prolong this thing and keep it from really going under. So there's no telling what they're going to create out of thin air. But as always, at the end of every report, I like to leave you with a little bit of a positive note for those who are concerned and want to become more monetarily aware. Marc Faber, billionaire investor, says gold should comprise 25% of your investment portfolio. So here's a man who runs a gloom, doom, and boom report, and he gives a little information as to why. He says, young adults will earn less than their parents and die with less than their parents, Faber said, explaining that these parents, when young, bought U.S. Treasury bonds paying 7% rather than bonds paying nothing today. What else he said? Faber said rates are so low that investors can't make money in bonds, so they keep buying stocks even though the prices are inflated. Central banks want rising stock prices to make people feel wealthy and therefore spend their money, but the end result is income inequality and investor resentment. And so some things that stand out here is stock market rises, so you feel wealthy. And therefore, if you feel wealthy, you tend to go spend more. And being that we're in a consumer-based economy, that is how this thing is kept afloat. So anyway, this is RTD News for today. Also, I want to thank those who have expressed interest and contributed to the monetary awareness with these great shirts here that I've come up with. Wanting to put them on as many people as possible to get people to ask questions. Ask questions about, you know, gold and silver. Most people don't even know that gold and silver was demonetized, and then that's a good conversation starter. What does freedom mean? You know, what does freedom mean to you? What does monetary freedom mean to you? That's a good way to explain it to people. And then I think this shirt here, the Financial Matrix, really sums it up with saying, hey, if all you have is stocks, if all you have is real estate, which is a good thing to hold on to, but make sure you own it, and all these things here, get people to ask questions. You can really begin to share your viewpoint and help people wake up while there's still time. So once again, hope all is well. Bringing you more news later. Check out some free books I got here. Definitely worth your while to educate people. Got another book coming tomorrow. Other than that, look forward to bringing you more news, and I'll see you soon.